Welcome to actutorial.com. In this video we will tackle general journal entries, or how to make a journal entry. The journalizing lesson is included in the website located in the chapter 2. But first, before proceeding, you must read these lessons for you to better understand the journalizing method. So we now proceed to the sample business transaction showing journal entries. We will now run our simulator. So first we put our company name, for instance. And the operation month is January, the end date is 25, and the year is 2011. The first transaction says Jaro opens a rent car business by investing cash of 50,000 and 2 cars worth 650,000. First we enter the year and the month and the date of the first transaction, which is 1. Then we put cash and cars. In this case we put vehicles. You will notice that the first entry has more than one debit account, which is cash and cars. These accounts are both assets, so we debit these two accounts. This journal entry is called a compound entry. So cash 50,000 and 650,000 for vehicles. After entering the two accounts, we add another entry, which is capital account, and we credit it because the account is an owner's equity type. So 50,000 plus 650,000 is 700,000. We now proceed to the second transaction, which is January 2. Jaro purchased 2 machines in cash for 30,000. The next entry will be January 2. In this case, equipment and cash. Asset will increase in the form of equipment, so we debit the account for 30,000. We also enter an asset account in form of cash, but this time not an increase but a decrease because it is used in buying the machines. So instead of putting it on debit, we credit it because it's a loss in the capital. The next transaction is January 3. Jaro purchased furniture to Vibar's Furniture on account for 15,000. The date is 3. We put furnitures amounting 50,000. We debit it because it's an asset. On the other hand, we add an accounts payable, which is a liability account, and credit it 15,000 because it's a liability to Vibar's Furniture. Next transaction is January 4. Rather, item number 4, January 10, 2011, Jaro paid 7,500 in cash. The account which is due to Vibar's Furniture. Jaro now paid in cash the account payable liability. We now add an accounts payable, but instead of crediting it, we debit it because we're making a decrease in the liability amounting 7,500. We add a cash account and credit it instead of debit because we are making a decrease also in the capital in form of cash as payment to Vibar's furniture. The next transaction would be January 15. Jaro paid the account due to Vibar's furniture with a note amounting 7,500. 15. Accounts payable. Instead of debit, we credit it again. On the other hand, we add a notes payable, which is a liability account. This is because instead of paying in cash, the account was paid using a note. We credit the note payable account because this is a liability account. So, next transaction. January 16, Jaro made cash withdrawal of 2,000 for emergency use. We add drawing account. Amounting 2,000. And we debit it because it's a decrease in Jaro's capital. Lastly, we add a cash account and credit 2,000 because the owner's equity was decreased upon drawing. Next transaction,